following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Natalie Goldberg. Follow what you love, and it will take you where you want to go. Market-wise, let's take a look at it out here. We have the Dow Industrials down 222. Nasdaq's off 67. S&Ps are off 26. Gold contract down $16, trading at $1,187 an ounce. Silver down 30 cents at $16.75 an ounce. Platinum down 26 at $1,125 an ounce. Copper flat at $2.84 a pound. Light sweet crude off $1.58 at $58.14 a barrel. Bonds, we have the 10-year up 26, 127.20, 30-year up 2.5 points at 156.07. King dollar up 1,300 ticks at 97.44. The euro is down 112 at 108.66, and the yen is up 1.52 at 123.08. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have out here? Okay, you got an expansion of volume right across all the indices, folks, all the ETF structures, all the above. You get the SPY, we're down 255. We're trading 85 million down. You're inside the lower range. That's the bottom line. The lower range that we're talking about, the range that we've been into for 6 months, that's under 212.42. And what does that set up? That sets up, it's going to make a run for the lower end of the consolidation. The lower end of this consolidation is at that 204.12 mark. So it's going to get interesting to see how we first off come into the first part of the consolidation. And the lows in the first part of the consolidation are 206.76. Those were the lows that... There we go. Those are the lows that were generated out here. That last low was on the 6th of May. So we'll see how we come into that level. If it can basically bounce off that level, or it's going to go right down to the 204.40 number. NDX 100, we take a look at the 3 Qs. What do you have with the 3 Qs out here? What you have, you get an expansion of volume as you're going lower. We're at 18.5 million shares right now. You're inside the lower range. That also sets up that you'll get down into this 104.34 number, and right now we're at 108.92. Now, what's really intriguing about the NDX 100 is this, folks, is that what you had out here today is that Charter Communications is taking over Time Warner, the cable aspect of it anyway. And inside the NDX 100, now check this out. This is really wild. So inside the NDX 100, the leader out there is Charter Communications. That's up 374. But watch this. This is where it gets wild. The second one is Charter Communications. That is a different share, but Malone is huge, and he has 3 separate entities out here. That's number 2. That's up 57 cents. And then number 4 is Charter Communications. That's number K, SK. No, it's the number K series. That's up 39. So this is what's really wild. So here's the point. The point is, out of the 4 leading stocks inside the NDX 100, 3 of them are Charter. They're different series numbers, but it's important to understand because guess what? That is saying the market is digging what Charter's doing, but each one of those hasn't been able to hold even the highs of today. Each one of those. So bottom line, what I expect you're going to see what? More downdraft coming. Gold contract. What do we have with gold out here? Let's take a look at gold. We're trading 1187 right now. The gold contract has an expansion of volume as it's moving to lower price. We've done 220,000 contracts out here today. What that sets up is that sets up, yes, it's going to go after this swing low. The swing low, well, this is where it gets really wild, actually. The trading day from the 30th of April. 30th of April? Yeah, 30th of April. We did 213,000 contracts there. We got down to a low of 1176. What we had out here today is that the last low, swing low that was established is 1168. That was established on the 1st of May. Now, the high of that low is 1184.40. And what's so wild is that, okay, we got to 1184.80. Bottom line, I expect it's going to at least hit the high of that once again. We'll see whether it breaks it. Now, in that same context, this is where, if you happen to be in the metal market, you want to wrap your head around this for a second. Silver hasn't rejected lower price, but what we have done with silver is this. It has only made a leg down to the second sign of strength that it's had. The volume has contracted dramatically. We've done 46,000 contracts, and the 46,000 contracts is coming against May 13th, and a low of May 13th is 1657. We got down to 1664 today. Rejected that price, we're at 46,000. So we'll see whether silver can take us out of here. If we go look at the GLD, which you'll see the Street Tracks Trust, inside the texture of the GLD, what you have a large contraction of volume. It hasn't held price yet. We're down 159. You've done 4 million shares. Well, the 4 million shares is going into 9 million and 8 million. So inside the gold contract itself, and the gold contract needs a lot more volume to break down into much lower price. Oil. We go take a look at the oil contract. What do we have out here with oil? What we have with oil right now is that's down $1.57. That little baby, CLN5. Okay, so that is down with 300,000 contracts. That's an expansion of volume, but oil's going to have to break and stay under 57.93. Right now, we hit 57.71 today. I suspect it's going to try to, we'll find out. It's going to try to basically get into that again. If it gets into that again, then you'll see oil down at the 56 mark. What you do have, if we go over to the XLE, and take a look at the XLE, you have the XLE coming down with juice. In fact, it's an ABC structure on the way down. It's taken out its B point. It has the juice behind the move. Chevron, ExxonMobil, they're all doing ABC structures on the way down. Bond market. Let's go take a look at the bond market. We take a look at the TLT, the 20-year plus. What we have with the bond market is this. Bond market today, even though it's up on price, down on yield, no juice, folks. This is a counter-trend bounce. The TLT is up $1.89. We've done 7 million shares. 7 million is going against 13 million, 14 million. It's pretty intense, actually. Now, we certainly can get to a price point of the 123.55, which was the swing point that was established out there on May 8th. But it looks like bottom line is that with the market down fast and furious, which it came down fast and furious today, bonds themselves still are not getting real juice behind the move. Well, the TLT isn't. This is interesting. So the 10-year actually is. The 10-year has good juice behind it. The 10-year's done 2.2 million out here today. So the 10-year, we're at 127.28. The 10-year is saying that, yeah, it's going to try to go after the swing point, which is 128.06. Let's go take a look at the 30-year. 30-year bond. That's at 390,000. Yeah, no, this is going to bounce more. This is going to be interesting. Yeah, this is going to bounce more. The 30-year today has done 390,000 contracts. You're up 2.5 points. You're at 156.02. Yeah, the 30 is going to go too. Yep. So this bond market wants higher price. Higher price, lower yield. The 10-year right now is trading at 2.137. Now, let's go over to King Dollar and take a look at King Dollar. King Dollar's got movement out there today, no doubt. That's up 1,300 ticks. we take a look at King Dollar, and King Dollar is trading at 97.40. You've done 61,000 contracts. King Dollar needs 100,000 contracts, folks. So you have an expansion with volume with King Dollar. It's not rejecting price, that's for sure. So we're at 97.45. That can actually get up into this 98.41. You know, you made it over the downdraft. That was created on the 29th of April. That high out there on the 29th of April was 96.29, and you're out there at 97.45. This is Tom O'Brien. This is TFNN. Excuse me. Our phone number is 877-927-6648. The Dow's off 200. Nasdaq's off 62. S&Ps are off 24. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials down 210. You get the Nasdaq off 64. S&P's off 25. As we do each and every Tuesday at 20 past the first hour, we get our man, Mr. Basil Chapman. Basil has an outstanding program right here every trading day, folks, 11 to 12 Eastern Standard Time. Now, you can get that program right on your cell phone, TFNN.MOBI. That gets you the full audio. If you'd like to get the video, Tiger TV, just go to TFNN.com on your cell. On the right-hand side, you see a little box. It will say devices. Looks phones. Hit it. Our service will know what type of device you're on. It will deliver the video as well as the audio. Basil also has an outstanding newsletter. It's the opening call. You can test drive it 30 days absolutely free. When you're at TFNN, go to newsletters, right at the very top. Trading newsletters, you see opening call right there. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You have a good weekend?
Very good. Thank you.
Cool, man.
How was your weekend?
It was fabulous. Nothing like it.
The weather was fantastic. It was that makes a big difference.
It does, and it's hard to believe, folks, but in Florida, you know, it's still not only fantastic, but the humidity just hasn't killed us, which is just amazing. I mean, it was like 89, 90 without humidity all weekend. It was fabulous. It was amazing.
That's terrific.
So what are we going to look at today?
Well, as usual, we're looking at the Dow. When we last spoke last week, I was expecting just nominally higher highs, which we haven't really seen. I was expecting we were at that point, we were in the 18,000, high 18,200s. So the candle today is really a very strong down candle. Of course, the day is young. You never know with the last 35 minutes, anything can happen. However, what I'm looking at here are a number of things in the Dow. The candles that were forming back last week were very small doji, very tiny. They looked like little plus signs. And there wasn't enough power to push higher. At the same time, the 9-period exponential moving average up until today was holding very well as support. So what my thinking was that there were just enough stocks that I was looking at that were still looking like they could go higher. We have two stocks, in fact, that are higher. Even today, they're higher than when we bought them. And the aspect that I'm looking at very intently here is what happens if this dashed green line is there. There's a minor up channel forming, and you can see there's a dashed line green and dashed line pink at the top. At the bottom of this up channel is another, what I call an inside track. So the price went this morning of the Dow right to the bottom of the up channel support area. And within that context, 17,993 was the low. My thinking here is that the pattern I'm looking at this very moment is not a very pretty pattern. The MACD is just started to cross negative. The stochastic is still at 83%. But if you look at the candles that were forming previous to that in late April and in May, every very strong down candle, these black candles, was followed by an inside bar. That means a higher low and a lower high.
Yes.
And a strong white candle. So tomorrow is going to be very important. Has that pattern changed by breaking underneath 17,000, let's call it 17,970, closing underneath that would be very negative. Or once again, is it just enough strength to try to make a move towards the upper part of what I call the inside track repellent zone? So as it stands right now, what I said to subscribers on my opening call is that we're getting ready to start our shorting once again. But I needed to see how today unfolded. And what's very interesting is that within the context of what we're looking at, we have a stock. I've spoken to you for a couple of years now. We always get the stock. It's Rite Aid, drugstores, and RAD is the symbol. It's trading at 862. And what I had shown was that there was a pattern, a very interesting pattern, a cup formation. And this pink dash line, I call it the trajectory line. It's the reversal or repellent target line. In other words, as it goes up, it should bounce up against that, but that line is also a magnet making the price higher. So we got it down in the $8.30 area. It's trading right now at 8.61. It did actually hit 8.71 today, but the pattern looks quite good, and the stochastic's holding well, and the MACD is good. So I'm hoping that we can get our target price, which is in the 880s, to a little bit higher. And that's the way I like to look at the market when it gets to this kind of choppy sideways move that can actually pull back and then regain those losses, or it can rally and then give back those gains. Because really, we've been in a sideways trading range for over 3 months, maybe 4 months, depending on how you look at it. So I think you have to have some independence. Another stock that we bought the other day is Goldman Sachs, and it's made a peak C. In the Chapman Wave, we always like to look at Ds or Es as being an area of reversal. So we have a position in Goldman Sachs, and it's holding very nicely here. I'm expecting leg D. So that tells me, and then I think we've got to be careful. So a couple of stocks looking good at this particular point, but a lot more stocks, especially the weekly charts of many stocks, are starting to act very poorly. And I think that we have very limited upside. I still think there's a chance of going a little higher. But basically what we're really looking at here is, how do we get out of May into June? If the Dow closes at any point down into the 17,800 or lower, and the S&P goes down to, say, the 2,097 to 2,087 area, then I think we've started the rollover. And I think it's very selective right now. And we spoke about this the other day. We spoke about the bonds. You were talking about it just now. Very strong move in the TLT, but it has come all the way from 138.50 down to the 118. So you can expect a bounce. Does this become more of a bounce? If it does, then I think money will migrate from the bonds, from these stocks, back into bonds. And that's how it's been going for quite a while. So I think this is just a time to be very cautious. If you're on the long side, I'd say put in some tight stops. I don't think you should be afraid of the long side. Just make sure that you know exactly what your parameters are. But I can tell you that today was, I would have expected a minus 60 in the Dow and maybe a minus 8 in the S&P early in the morning, and then start to build strength later on. That's exactly the opposite. We haven't seen that at all. In fact, it's a very weak session. Finally, you got the VIX rallying quite strongly. So I think this is definitely a time to be cautious.
Yeah, I mean, well, as you had brought up, the Dow basically gave back everything since last December in 6 hours.
And it's in the speed. That's the whole thing.
Yeah.
Well, it's done that before, but it's regained over a couple of days. It's regained that. As you can see, I'm showing the chart again.
That's right.
But
yeah,
the difference here is that the MACD is, if you're looking at the charts, this MACD right here, the moving average convergence divergence, is much lower than when it made the high back in the 2nd of March at 18,288. And the slow stochastic now is at 83%, and right then it was in the 95% area. So I think this is absolutely a time to be very careful. In other words, I think even if there is a rally, I think it's very limited on the upside, and that says, well, be careful, because if certain support levels start to break down because the technicals are not as strong as they were previously, it just says, hey, we haven't had a decent pullback for quite a while. Maybe this is the time that we're going to start looking at it.
And folks, you can come over and test drive Basil's newsletter, The Opening Call. Go to TFNN, go to newsletters, trading newsletters. You can test drive it right there, 1 month, absolutely free. And of course, don't forget, every trading day, 11 to 12, right here at TFNN, right on your cell phone, TFNN.mobi. Basil, have a great one, safe one. We look forward to the show tomorrow.
Thank you very much, Tom. Have a great evening.
Thank you, man. You too. Stay right there, folks. Coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is down 189. You get the Nasdaq off 58. S&Ps are off 23. And inside the Dow Industrials, folks, this is different. They're all red, each and every one of them. Leading the way down, you get Apple. Apple is the leader inside the Dow Industrials. That's down 298. You get Chevron down 159. United Technologies is off $1.78. and Visa is down 102. Now, the leader inside the Dow, it's still red, is DuPont. DuPont's down 9, Verizon's off 12 cents, McDonald's is down 25, and Pfizer is down 14 cents. Inside the NDX 100, putting the juice to the pedal on the way down, is that you have Discovery, though Liberty Ventures are down 342. That's who's going to end up, well, that's interesting because that is another Malone company too. But Charter Communications are the top 3 leaders inside the NDX 100. Mylan Pharmaceuticals are 4th. On the way down, the biotechs are starting to hit the NDX 100. The Alexa Pharmaceutical is down $5.82 at 166. Amgen is off 480 at 158.79, and TripAdvisor is down 235, trading out at 77.92. Now, if we go over, we go over into the. There she goes. We go over into the gold market, folks. A couple tigers wanted to look at Gold Corp, GG. GG has way too much volume, folks. Gold Corp is coming into its swing low with juice, with volume, expanding. We've done 9.7 million shares. You're taking out the swing point of 9.6, which is at 1753. So what that does set up, we'll put this on a weekly basis. We bring this back. We put this on a weekly. And what you have in Gold Corp, very well, maybe the first one that's coming into this area, 1701 is game. You break 1701, and that's going to be trouble for Gold Corp in a big way, not in a small way. So that's something that you absolutely want to take a look at. Now, folks, let's go over to our man, Mr. Daryl Martin. Daryl, folks, there's an outstanding show right here at TFNN every Tuesday, Thursday, 1 to 2 Eastern Standard Time. If you haven't test drove the Nadex platform yet, folks, it's a great time to do it. You get high volatility inside the business, inside the market. You can come over to our website at TFNN. At the very top on the side, you're going to see the Nadex banner. Hit that banner. You can bring it up. They'll put $25,000 of paper money into your account. You can start to understand how to trade it. And, of course, Daryl, I, and my son Tom, we do a show every Friday also, 10 to 11 Eastern Standard Time. Daryl Martin, what's going on?
How's it going, man? It's a beautiful day in the markets, huh?
It is. You sound like, I know you're getting flooded in Texas, but you're sounding like you're on this flood right now.
Man, it's been raining a lot out here.
Wow. That's pretty wild.
The audio may be a little messed up right now. If it is, just let me know.
So, needless to say, inside this Nadex platform, well, depending like anything else, what side you're on, when we start talking defined risk, bottom line is that there was a lot of action out here today.
Oh, no doubt. Some massive moves. NASDAQ was awesome. Dow was fantastic and smooth. Even the FTSE and the DAX, the Euro stocks, are great.
And what is
all those on the thread?
Yeah, and folks, if I'm sure many of you may have tried this, but if you have, I want to go to 2 different folks out there right now. If you have tried this, what you want to look at the beginning of the week are the weeklies, because these weeklies, which Darryl had just brought up inside the Dow Industrials, at least, you're going to be really surprised how the Dow. On the binaries, Tom got a couple of these binaries this morning, Daryl, on the weeklies, and it's like, oh my God, it's a 10 to 1, a 1 to 10 shot, folks. But you wouldn't believe at the beginning of the week. Well, I mean, this is down 200 now, but that was not outlandish for the amount of risk that could be taken.
Nice.
Yeah. So we'll see where it
really
shakes.
good setup.
Yeah, well, it is. And what happened this morning, by the way, folks, is that the futures weren't down as much as the market indicates right now. What did happen is this, and the DAX was basically indicating this very early. And
right.
our futures held up really good right until the open. And then at the open, man, see ya, don't want to be ya. They went from 21.19 down to 21.02 in a heartbeat. And most of the time, what you see is that can happen right before the market. For some reason, it held up there this morning. But if you were listening to TFNN. You know, man, John Logan, he was talking about it. Larry Pesavento was talking about it. Bottom line is that you could have picked up on that pretty well. You know, so the bottom line is that we get volatility out here right now in spades, and what you also have is that it's not only just the equity markets, folks. You had the dollar went up 1,200 ticks, the euro went down 1,000 ticks, 100 ticks rather, in oil. You know, they're all tradable in a huge way.
Well, there's so many different ways to take advantage of them with the low risk spreads and low risk binaries, and you know, you can lower your risk by position size a lot more than you can on futures. There's a lot of cool ways to trade them.
Yeah.
So we got these big moves happening right now, and you want to be able to have that defined risk to be able to take advantage of it.
Yeah, there's no doubt about it. Well, listen, man, we appreciate the update. You have a great one, a safe one, and you stay safe, man, with all that water out there.
I will do. Thank you.
Thanks, man. Have a great one. Dow right now is off $1.78. If we go over to the SPY, folks, and we take a look at some of these ETF structures, what you're going to see is this. The SPY right now is trading at the 210.85. What you're going to see out here is you're going to see high volume. We've done 96 million shares. You're just back in the range, meaning back, you know, this thing hasn't got out of the range. And so, well, it got out of the range for 4 days last week. If we take a look at this and we put this on a weekly basis, what you're going to see is that we're in the same spot that we were going back, well, December. You know, so you're almost dealing with 6 months. You could really, it's 6 months. That's where we are right now. The bottom of that range, the first bottom is at that 204. The larger bottom is at that 197. And what do we have at October 15th swing point? I think I'm going to get a tattoo on my forehead, October 15th. That number's going to get hit. It would be really wild if, in fact, they basically can hang up here until next October, which isn't that far away, by the way, and then it comes and whacks it. I suspect it's going to be before that. The reason being is this. This is what is unusual. It's not unusual that the market is back today. What is unusual for the day coming back after Memorial Day, folks, is that the volume is going to expand. The beginning of summer is Memorial Day weekend, specifically for traders. You know, what happens in the Northeast, folks, okay? And the Northeast still runs the trading desk. New York is still the name of the game. Boston's still the name of the game. I know that the country's 10 times bigger than all of that, but guess what? That's where all the action is. The huge amount of funds basically are narrowed inside Boston. For Boston, you know, great city, but it's a small city compared to New York or San Francisco or these larger cities. But the bottom line is that for the amount of density with funds in the city, it's huge. Bottom line, that these 3-4 day weekends, normally you come back on a Tuesday and normally it's slower. That's not going to be the case here. Now, what that sets up is that in the summer trading, you get Tuesday, Wednesday, and Thursday for movements in the marketplace. What I expect you're going to see here, you'll see some follow through. It's going to be really intriguing too, because as Basil had just mentioned when Basil was on, is that each and every time that we've had a downdraft, the next day, guess what? It dusted off. It says, I'm going topside again. You know, so we'll see where that baby does shake out today. Tomorrow rather, as it goes up. If we go overseas and we take a look at the DAX, the DAX came down. That was down $1.89 today, and it did have volume behind the move. So the DAX is also saying that, hey, guess what? It wants to go to lower price. We're at 11,625, and the lower end is 11,167. That's how $500 on the way down. I don't expect it in one day, but the 7th of May also is a high volume low at 11,167, and right now we're at 11,625. So that makes a difference, and we'll see how that whole baby does shake out. Where is also divergence is this. The divergence has to do with the bond market going up. The juice behind it is good today, but here, let's bring this up for a second. Let me show you something, because this As soon as we come back, we'll basically bring that bond market up. Dow Industrials right now are down 184. NASDAQ is down, let's see, where is she? She's down 56. The S&Ps are off 22. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are off 184. You get the NASDAQ down 56. S&Ps are off 23. And we go over and let's go take a look at the different ETF structures. We'll take a look at the XLE first. XLE, of course, is the large integrated oil and gas structure. That is down $1.28 today. We've done 11 million shares. You're taking out the swing point, and it's going to need more than that. So the swing point has 17 million. So the XLE itself is not an ABC structure on the downside, but it's under the 79.84. You're at 78.92, and what that sets up a run down to the 77 area. So this is going to be pretty wild watching how this one shakes out. March 18th, that's when we had come off the bottom of the XLE. The low there was 74, the high was 77.95. If we go to ExxonMobil, now these are the two largest structures inside the XLE. You get ExxonMobil, that is trading down $1.11 right now, 8.5 million shares, and that's going to need 9.7. I don't think we'll do another for an ABC structure on the way down. What you do have is this, though. There's nothing to stop ExxonMobil from coming down to the very lows and testing the swing point, which is 83.33. We're so close to it right now. Chevron is one of the largest. That's the second largest mover inside the Dow Industrials, dragging it down. That's doing 6.1 million shares. And what is sticking out like a sore thumb for Exxon is the aspect of the 103.28, which was the high of January 30th. Now the low, it's a high volume swing low. The low of that is the price point of 98.22. You know, we've hit 102.93 today. And, you know, not a huge amount of juice, but enough. So that little benchmark is going to be really important on the daily as well as the weekly. The bottom of that is that 98.88 area. And when we do look at that right now, the bottom line is that if you put this on a weekly, what you're going to see is because we're so far into the bar right now, that is, see the top of that bar in the weekly, folks, is 109.35. So we're at 103. You're $6 into it. That's saying you get that far into a bar, trading bar, the probability goes much higher that you get to the bottom of that bar, and the bottom of that bar is 98. That's a big number. There's no two ways about that. Now, let's go take a look at the XLF. Inside the XLF, of course, you know, the banks are all over the news these days. And you know what? It just doesn't move them. I mean, you know, the banks, bottom line, you know, you get, 5 banks pled to felonies. And it's not affecting them whatsoever. In fact, when Darryl was on, of course, he lives in Dallas, Texas had an additional law that their pension funds cannot be run by anyone that is a felon. Well, bottom line is that they had not changed it first when Citigroup was the first one. No, UBS was the first one. You said to plead guilty. That was about a month ago. Bottom line, after these 5 banks pled guilty this last week, they just decided to change it again, and now the bottom line is that you can be a felon if you're a bank and run it. So if we go over to the XLF, now this is the first day that the XLF is actually getting some juice in it. It's only down 25 cents. Now, the XLF never made its high. It didn't make the 25.14 high. Right now, we're at 24.61. We'll see whether how it operates trying to get to the bottom of the consolidation that it's in right now. What you do have, and this is kind of how the XLF moves. The XLF still has that high volume October swing low. So that number is 22 to 21. And what you find is that the XLF, folks, is normally one of the last ETF structures, the financial structure, let's put it that way, the financials themselves, to fall apart. That's just kind of how it goes. So we'll see what other kind of pressure, stays on these markets, if in fact there's enough pressure to bring down the XLF, because the XLF will be lost. I remember it many times. Particularly, I remember it in 2007, and it stayed, it held, and then when it cracked, oh man, get out of the way. Transports. The transports are screaming. I mean, absolutely screaming that not only lower prices are coming at us, okay, but we're talking about extraordinary lower. The transports right now, that's at 83.48. Now check this out. October 15th, right? The high of October 15th is 81.69. This is something that was up there at 9,300. Right, we're already 1,000 points down, and guess what it's gunning for, folks? October 15th. The gun is on, and what we'll see here is that will, in fact, it break with volume. What we have done is this. When you take a look at the trainees, and we take a look at the aspect of how you broke last week, well, we broke with volume. So what that would mean is that we take 9,300 to 87. So you get 6 and, 6 is 12. That gives you 75. Okay, so price projection-wise, the way that we broke last week is saying that we're going to the low of October 15th. It's 7,500, ballparking it. The low is 7,700. Now, what's going to be cool here is this. Is that benchmark, now that'll be the first big indice that could down to that benchmark. There's many equities, folks, that are already blown away that benchmark. But we're going to get a lot of information how the trainees come into that benchmark. That's how the whole thing is set up. Last week we did 86 million shares coming into it. That is going to need a lot more to break it down. The top of that 8,100, we're dealing with 130, I think. Yeah, 130 million shares. So we'll see whether it builds more steam as it's coming down into that area. We go back to the SPY for a second. We look at the SPY, and we put this on a 10-minute basis. And what you're going to see is this, is that the SPY itself is trading at a price point, well, actually, if I look at the E-mini. So if I put the E-mini up for a second, 1 second, this is easier. ESM5. So the E-mini right now is trading at a price point of 21.01. It was one straight line move. You're talking about from 122 down to 0.96, okay? So what's that, 22, it's 27 points. Bottom line is that, this market can't go anywhere. We take a look at the DAX, what I expect you're going to see out here. We get some numbers coming in after the close, but bottom line, there's going to be more selling pressure, for the next few days in this marketplace. This is Tom O'Brien. This is TFNN. Dow Industrials right now down 177. You get the NASDAQ off 55. S&Ps are off 22. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's Gold Report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Barbara Kingslova. Hope is a renewable option. If you run out of it at the end of the day, you get to start all over again in the morning. How cool is that? It's a beautiful thing. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials down 190, NASDAQ off 56, S&P's off 20, gold contract trading down $17.13 at 1,186. Had some juice on the way down too, folks. Silver down 32 cents at $16.72. Now, there's where we have some divergence. Silver didn't even get to the bottom of the swing point of the day of strength. We'll talk about that in a few minutes. Platinum down 27 bucks at 1,124 an ounce. Copper flat at $2.83 a pound. Light sweet crude down at 148, trading at 58.24. We'll see what the oil market's going to hold. Oil came down. The volume wasn't that bad, though, but bottom line, couldn't hold price. Bonds. 10-year up 20 ticks with volume, 127.29. 30-year up 2.5 points with volume, 156.07. King dollar up 1,300 ticks at 97.41. The euro back 103 at 108.74, and the yen up 155 at 123.11. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We take a look at we'll start with the SPY. Bottom line, folks, couldn't hold price last week. You come off the holiday weekend. You do 116 million on the way down. You're down 229. You have an expansion of volume. This is going to go after the lower end of the consolidation. What you also have happening, too, of course, is that it's a false break topside. So when we broke topside on the 18th, that was the first day we got over the highs. We had volume there of 75 million. Each day, so check this out last week, what we did. We did 75 million. Tuesday we did 72. Wednesday 76. Thursday 64. And then Friday 57. Bottom line at the highs, couldn't handle it. What happens? You come off those highs, 116 million. What does that set up? That sets up a run to the bottom of the consolidation. Now, what's going to get interesting here is that the last time that we came down, the S&P stopped at that 206.76 area. The bottom of the consolidation is not down to the 204 area. So we'll see how it basically charges into that area. The NDX 100, and by the way, what was unusual is that the Monday coming back from a holiday, folks, meaning you're coming back on a Tuesday, it's really unusual to get expansion of volume. Most folks basically, they get in, but they get in later. That is a whole different ball game. I expect you'll see not only more volume tomorrow, you'll see lower price. NDX 100, same setup. NDX 100. Now, this is the second time the NDX 100 has broken out and failed. The first time that the NDX 100 broke out was on the 24th of April. The 24th of April, it takes over its highs. It gets up to a price point of 111. Goes back down into 105. Straight down. Gets back up there again. And the NDX 100 actually is giving more information than just about any indice out here. And this is why. So, your first benchmark at that first high up here is the 27th of February. 27th of February, we had done 27 million shares, so 108.91. You go back downtown. As we go back downtown, we're belting 42 million shares out down at the March 26 lows. That's 104. You know, you can realize it just went from 108 to 104. And what happens is this. is that the NDX goes up and breaks out and has some real juice behind it, folks. Okay, when we broke out in April, you know, you got up to a price point of a 111.16, you did 31 million shares. That's not bad, okay? But then guess what? It fails again, and it fails on 47 million. So the force is downtown. And here's the kicker. Last week, what we were doing is that we were testing the highs of the breakout from the 27th of April. And that test was on anemic volume. I mean, it was pretty sick. You're talking about 21 million shares, and then we tested the 21 million with 13 million. The correlation is 13 million against 31. Bottom line, you can see no more buyers. Everyone who's in is in. Now, who are you going to sell it to? That's distribution. So now we'll see down the bottom of the end of this, will you get an expansion of volume? I suspect we will. We got the expansion today, which I said was unusual in itself. But that's the way that it looks like it's going to be set up. Gold contract. What do we have with gold? They took the gold contract south. They took it south with volume. We did volume out here today of 228,000 contracts. Now, here's where the divergence is inside the gold market. There's no doubt they took that south with volume. We got to a price point, low today was 1184.80. Now, that low is actually we're coming into 213,000 contracts. We'll see if, in fact, it's going to crack the 1184. You crack the 1184 and you go on 1168. Where the 1184 is, folks, is this. The 1184 was the last swing low. The high of the low on the 1st was 1168. The high was 1184.40. Now, we certainly didn't get rejection of lower price out here today because we had a huge expansion of volume. What we did get, we got inside the silver market. And here's where some divergences, because silver and gold, they like to trade together. Silver is much more volatile, but what has also happened is that silver has been stronger coming off this low, because silver first took over its March downdraft, and it took it over with a lot more volume, or a lot more price than gold, not a lot more volume. But what has happened with the silver market is this. Silver comes down today 31 cents. We do 47,000 contracts. We get to a price point of, let's see, where is she? Today was the price point was 1664. That's not enough. The second day of strength coming off the bottom on silver is what it was going into today, and that was May 13th. The low of May 13th is $16.48. We got to 1664. The volume was dramatically lighter. I suspect we'll see that get tested tomorrow morning. So we'll see how it handles that area. What does happen is that the correlation inside the gold market versus the silver market is pretty wild. Like gold today was down 1.45%, silver was down 1.91%. Most of the time what you see, if silver is going to be down, gold was down 1.46%, it's not unusual to see the silver market down 4.5%, and guess what? It wasn't. King dollar. Let's go take a look at King dollar, because King dollar is ruling the markets out here, folks, in a big way. Now, what's really unusual today is the aspect that good old King dollar is up and the markets are still down. So there's a lot of different dynamics that are taking place that are, I suspect, long-term changes in trends. King dollar today did 62,000 contracts. That's good volume. However, it's not as much as on the way down. On the way down, we did 100,000 contracts a couple different times. The way King dollar is set up is that we're at 97.39, 97.47. I suspect it's going to try to get into tomorrow morning, and we'll see whether it can handle it. If it does handle the 97.47 area, that little baby will go up to 100 again. So tomorrow's going to be a big number out here, no two ways about it. We go over to the bond market. And in fact, I'm going to put this 10-year bond up just for 1 second. Okay, so TYM5. We put the 10-year bond up, and what you're going to see is that we did 2.3 million contracts, and that's a big number. We didn't get to the swing point, however. And what I've seen in the bond market before is this. When you come off these lows, the bond market has shown that it can get juice behind the move. The real key is going to be, can it follow through with juice as it attacks the 128.06 number? And, you know, we're right next to that, folks, okay? We're at 127.29. There's only 32 points ticks in a point. So you can see we're only 9 ticks away from that. But that wants to get attacked, I suspect, tomorrow morning. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Workday, WDAY, and Workday, folks. The business plan of Workday. It's a cloud-based application for financial management, payroll initiatives, bottom line, higher education. They use it right across just about software product to keep organized. Low is 74 for the year. The high is 97. It closed at 92. Right now, that is trading out at 88. And the numbers go like this inside Workday. The estimated loss was 8 cents. They lost 6 cents. They see their cash flow is 63 million. Their growth is 45 to 47%. Bottom line is that market basically is saying, you know what? Numbers were great, but we don't like what's going on. What you will see is this. This is just going against, this was a counter-trend bounce going against the last time it came out with its numbers in February. In February, this thing went south from $94 down to 80. It's made its way all the way back up there with light volume. Now it's going to make its way all the way back down to the lower end of that consolidation. Now, folks, let's go over to our man, Mr. Andy Heck, as we do each and every Tuesday at 20 past the second hour. And don't forget, folks, Andy has an outstanding show right here at TFNN. It is broadcast every Tuesday, Thursday, 5 to 6 Eastern Standard Time. As soon as we get off the air, you can get this right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV, where you get the charts, the video, the audio, all of the above, just go to tfnn.com on your cell phone. You'll see a little box with, it'll say mobile devices on the right-hand side. You hit that box, our servers will know exactly what type of device you're on. You'll be able to get Tiger TV right on your phone. And of course, if you'd like to see it, have an outstanding newsletter, Andy has one. It's the Technomento Commodity Report. The way you get it, go to TFNN, go to newsletters at the very top. Go to Trading Newsletters, to the Technomento Commodity Report right there. Andy Heck, what's going on?
Hey, did you have a nice holiday weekend?
I did. Yourself?
Oh, very nice. Very nice.
There's nothing...
Always nice to have a holiday.
Oh, 3 days off is incredible. There's no doubt.
It's always good. It's always good. So, lots of action today, Tom.
Lots of action. Oh, you hear that smile? You hear that smile in his voice, folks? Lots of action today. You know what he's talking about? Without even saying it, he's talking about the gold market. Go ahead. Let's go.
All right. No. Hey, I heard what you were saying in the previous segment, and I want to tell you something that I believe. Today is the first day that silver actually acted rationally. So over the past 40 years, the average of the silver gold ratio is about 55 to 1.
Yeah.
If you take 33 cents and multiply it by 55, you get about where gold was down today. So it actually has acted rationally today for the first time. You know, you're right. It used to be silver would be down, 4.5% when gold's down 1.6%. But it's kind of, and I've been saying for a long time, either silver's too cheap or gold's too expensive. So today, it actually acted rationally to me. Now, we'll have to see what happens. Look, it looks as bad today as it looked good last Monday when it was at 1232. These markets are just trading back and forth on themselves. We went down to the pivot point, which is like now 1200. Now it looks like it's going to crash below 1175. I'm not so sure, only because if the equity markets keep going south and everything keeps going like it is, it's not looking good for it. But we're in a lot of trading ranges here, and this is really kind of, look, Memorial Day weekend's over. It's summertime, basically. We might go into some summer doldrums here in some markets.
Yeah, well, it certainly didn't start today, but I absolutely understand what you're saying, and I thought, which was surprising today, about the amount of volume that was everywhere. So that's
there was a lot of volume. I think there were a lot of people stopping out. Just get me out of everything. Look, the dollar really put in a nice bottom down at just over 93. No question. And that bounce is pretty significant. And that does not bode well for commodity prices in general. You see copper is down, almost 4 pennies today right now, 277.50. Gold down $18, silver down 33 cents, oil down almost $2 today. Took out last week's lows. So, if the dollar is really kind of the orchestra leader for these commodities lately.
Right.
And we have to keep our eye on the dollar here. I mean,
there's no doubt about that, right?
Right. So interesting markets, a lot of stuff going on with these Greeks. I don't know which way that wind is blowing. But I wanted to talk to you a little bit about a couple of articles I wrote this weekend in Seeking Alpha.
Yeah.
One that came out today, it was called Chickens Sneeze While Hogs Squeal. And that's all about the fact that, this avian flu, which they've had to kill and incinerate about 40 million chickens in the Midwest. The other white meat, pork, is the beneficiary. And we've seen a nice rally, 16% rally in pork prices. And I think we might see the lean hog contract go up to 90 cents or so.
And we're at 83 right now, folks.
Right. And that's kind of the target here if we can get above this short-term resistance around 84. So that's very interesting. The other thing is I have an article coming out tomorrow, Tom, about Tesla and Toyota.
Okay.
And they kind of inspired a little bit by our good friend and colleague, Mr. David White.
Okay.
Basically, Tesla has an electric car that runs on a lithium-ion battery.
Yeah.
80% of lithium is produced in Chile.
Okay.
The Toyota's coming out with a new car. They came out with it in Japan. They're coming out with it here. It is a fuel cell car that runs basically on hydrogen. Hydrogen and oxygen together pass through a platinum catalyst. And the point of the article is
this is going to be this is in a Toyota car?
Yeah, this is in a new Toyota. Yes, a fuel cell.
Cool, man.
Platinum catalyst. Now, usually in a catalytic converter, it's like 3 to 7 grams of platinum.
Yes.
This new car, about 30 grams of platinum.
Really?
So that's a lot. Almost 10 times.
It's
the
almost
amount
an
of
ounce. Yeah, right.
Right. So the point is that, if you look at the two cars, and what I did in the article is I compared them, the range. The Tesla car goes about 250, 260 miles. This Toyota car goes 350 to 400.
Okay.
There are hydrogen filling stations popping up now, particularly in places like California. And if the car takes off, there'll be a lot more of them. It's also cheaper than the Tesla. I think the list price on this Toyota is about 57 grand.
Okay.
While the Tesla's, about 70-ish. So there's kind of going to be a technology war going on here between these two new, very clean vehicles. And platinum can be a beneficiary. Now, having said that, platinum looks god-awful here.
Yeah.
At 11 1/4 and a $60 discount to gold. But as you know, platinum is so thin in a liquid that, if something new comes out and there's a new demand vertical for platinum, this thing can move like nobody's business. But I still like platinum relative to gold. I'm still in favor of shorting gold and long platinum, even if the prices go down or the prices go up, based on the rarity, based on the industrial applications, based on production costs. Platinum is, dirt cheap here.
Yeah, no, there's no doubt.
I have a couple of other articles out, one on oil, stuff on the dollar.
Just stay right here. You can give us a heads up as soon as you come back. Andy Heck, Tom O'Brien, you stay right there, folks. We're coming right back. And don't forget, folks, 5 to 6 tonight, as in Thursday night also, Andy's going to be coming up, giving you the whole rundown about what's happening in the commodity world all around the world, folks. Dow Industrials finished down 190. Nasdaq is off 56. S&Ps are off 19. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow finished down 190, NASDAQ off 56, S&P's down 19, and we're talking with our man, Mr. Andy Hecht. And don't forget, every Tuesday, Thursday, 5 to 6 Eastern Standard Time, folks, Andy's got an outstanding program right here at TFNN. We're talking about a couple articles that Andy had written today. I believe they're released today on seekingalpha.com.
Yeah, I had 5 out today. I have 3 out tomorrow. The one on the Tesla comes out tomorrow, and I have another one coming out tomorrow that I really like. It's called Putin, Let Them Eat Seeds, and it's all about the fact that in Russia, they are, instead of planting flowers in their gardens now, they're planting food because of the shortages, because of sanctions and the ruble.
That's pretty smart.
Pretty, yeah, but it says a lot. It says a lot about the government, and if you remember back over your history, to the French Revolution, when there was no bread, they chopped Marie Antoinette's head off. When the Arab Spring started as the result of bread riots in Tunisia and in Egypt.
That's serious business, isn't it?
It's serious business for a leader of a country when food shortages develop. So that's kind of the takeaway from the article. But today I had a whole bunch of stuff out there. Something on gold. It kind of said more of the same. What it said was I was expecting it to go down towards the bottom end of the range, but who knows here? It's kind of boring. It's just trading this range. I'd like it to break one way or the other, and then we can get some action in the market. But right now, to me, it's a range trade. So picture this, folks, okay? The Venezuela is in a mess. I mean, an extraordinary mess. They have inflation that's running at 69%. Their currency has just crashed another 30% in a week. Okay, a week. And this morning they're scratching their heads because this is what gets interesting, and this is why I'm bringing it up inside the gold market. They're scratching their heads trying to figure out how did the currency itself get under the value that the central bank of Venezuela is actually saying that they have in gold. In gold reserves.
Yeah, so I read that, it says, and, anyone that's in the metal market, folks, I couldn't say anyone. Most people don't really believe what a lot of countries are claiming that they have with their metal reserves as it is. So,
right.
When I saw that, I said, oh, this is really interesting. Because the market, if you believed what they actually did have in reserves, the bottom line, their currency would be a buy, but don't buy it.
No, I wouldn't buy. I wouldn't go near that with a 10-foot pole. The only thing that's cheap in Venezuela is gasoline. You can fill up your tank for like 50 cents.
Yeah, I'll tell you, man, it's going to be wild watching this whole thing shake out.
Absolutely.
And we'll see where the aspect, if I remember anything of 2007, 2008, folks, this is what does happen, or what did happen in the gold market then. As our S&P went down, those equities got killed, and so did gold. Gold went from 1166 down to 666.
Mm-hmm.
So bottom line, that's a heads up in itself. Now, what the difference is that gold has come down, and no, not come down. Gold has been down for almost 4 years.
Right.
So we'll see what the correlation is, in fact, if there's any correlation at all. But
it should be interesting. I mean, I think that, the whole commodity complex is just going to be like watching the dollar through the side of its eye.
If we've learned anything, it's based on dollars. There's no doubt.
Yeah.
It's all about high dollar, low commodity prices. Low dollar, high commodity price. I agree. I mean, when you look at these, you look at this chart right here, folks, okay, if you haven't been watching Tiger TV, you had wheat down 4% today. Orange juice was off 3%. Gasoline was off 2.5%. Natural gas 2.3%. The only thing that was positive by 2 pennies was cotton.
Yeah, well, it was 2 ticks, and cattle was like marginally unchanged. Everything else was just crushed. I mean, just crushed. So, tough markets here. It kind of like feels very deflationary right now with the equity markets going down. The only thing that was really strong today were those U.S. bonds.
Yeah.
Those 30-year bonds up 2 8/32 right now, 156.01. So hey, that's telling us there's a little bit of trouble here. That's kind of like putting money in the safest place in the world.
No doubt. And that's down substantially also. I mean, it's down from $170. So
right. Yeah. So it's bouncing, but it's kind of flight to quality kind of thing going on here. It's going to be interesting. This whole sell in May and go away thing. Maybe it should be sell before Memorial Day and go away, huh?
It's always something, man. That's the bottom line.
It's always something. But we'll see. It makes it exciting.
No doubt.
For sure.
And listen, folks, don't forget, every Tuesday, Thursday, 5 to 6 Eastern Standard Time, right here, right on your cell phone, TFNN.MOBI. Andy, thank you so much, man. You have a great one, safe one. Of course, we look forward to your show in like 20 minutes.
Thanks, Tom. See you Thursday.
Okay, man. Man, I'm telling you, folks, man, time is a trip. I cannot believe that time is going so quick. Meaning, like, hour by hour, tick by tick, minute by minute, whatever it is. It's like crazy. It really is. Let's go over and we take a look at the Walmart. Why Walmart? Well, what Walmart had done, folks, is this. Walmart had been in this monster consolidation. And it took 12 years, folks, for Walmart to get out of the consolidation. Now, let me bring this up because this is going to be an absolute mind blower if, in fact, it's going to try to make its way back into it, because this is really dangerous for the marketplace. So the consolidation that we're talking about goes like this. Walmart first reached a price point of $70.25 in 1999. And it went sideways. But it's really unusual, folks, when you see a market that goes sideways for basically 11 years. And that's what Walmart did. Walmart went sideways from 1999 up until 2012. So that's 12 years, right? 13 years. So then what do? Well, when we broke topside, we didn't have the volume. Okay, so that's the first part. You know, we get up and over a monthly basis of, it should have done over 700 million shares. And when it broke topside in 2012. And it broke topside with like 230 million shares versus like the 600 or 700 it should have had. Okay. It gets, the topside we're talking about, it gets all the way up to a price point of $90. Well, we're at $74.90. And the mind blower is that all this has to do is come down another $3.65, and it's going to be a major, major false break topside. That, folks, is going to be insane for Walmart, because watch how this works. This is how a technical setup works like this. First off, when you've had a large consolidation like this, normally you can break topside or break down, and it's going to be real. You know, that's a lot of building costs. When it did break, though, it didn't have the volume. When we broke down, we're breaking down, and the volume is lighter. It's 142 million, so it doesn't mean that it will get inside there just yet. If it does, it doesn't mean that Walmart, goes back to the bottom of the consolidation. When you do something like this, and I'm giving strictly a technical aspect of it, when you do something like this, if you get back inside that 70.25, that actually is saying that Walmart can go back to the beginning of the whole move, and the beginning of the whole move is like insanity, because the beginning of that move is down to 1997. So this is going to be really wild watching this thing shake out. First, we'll watch out how it comes, if in fact it comes into the consolidation. But if it does come into the consolidation and gives it up, I suspect what we have on a larger issue with Walmart is that good old Amazon and other online deals are basically taking the gravy out of the discount business. Because depending on, how you look at Walmart absolutely has most of the time some of the best prices on most goods. What I expect you see that's happening out there is that the online structure is doing some damage to them. So we'll see where that whole thing comes down. But that is going to be a major number if in fact it comes back inside that whole area. If we go over and we take a look at good old Apple, we haven't looked at Apple for a long time now. Apple was the leader today in bringing the Dow Industrials into lower price. The thing that's a mind blower about that is that the Dow, is a weighted average. And what's crazy is that Apple's only $129. Huge expansion of volume. We did today. We did 70 million shares. So that's saying that now Apple's at that 129. It's going to go after the 122.11, which is the bottom of the consolidation. And we'll see whether that takes it out. The thing that's amazing is that this is not like 3M coming down, which is trading at 159. It was down to $1.59, but you get some of those larger price stocks coming down in the Dow. The Dow will really get toasted. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say You can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Small caps. Let's go take a look at the small caps. So this one, folks, is going to be pretty tricky watching how this whole thing shakes out. So what we have is this. If we look at the IWM right now is trading at 123.24. Now it's in the lower range. What it hasn't done is tested the highs. We have a triple top that's in place with the IWM. You came off that high of 126.32, and in fact, you did come down with volume each and every time. The last counter trend bounce only got to 125.46. That was last Wednesday. And we did last Wednesday when we came in with juice, you came in with zero juice. 20 million shares was going against 48 million. Was going against 42 million. So the days you were going against, you were going down, you were initially going against the initial downdraft of March 25th. March 25th, when we came down, it came down pretty good, 42 million shares. You did the counter trend bounce, you got back up with 37 million, which wasn't bad, by the way. That was when we actually hit the highest point in the IWM. We hit the 127.13, and then what ends up happening, it comes right back off with 72 million on the way down. Big number. Now, we're at 123.24. We got to 122.52. We're already into the high of the low bar. With that setting up, it's that more than likely you're going to come down to the low end of the bar. The way that the volume is expanding, we'll see whether it can continue to expand down at this 122 area. But I expect you're going to see some follow through tonight down at that area. What we'll also see is this. The high volume swing, the October high volume swing, the high of that low is 109. So 109 is coming at us, folks. That's the way this seems to be set up right now. Now, if we go over to the DAX, I want to put you up on the DAX, because what we had happen here this morning is this. If you haven't listened to our man John Logan, folks, he kicks us off at 8 o'clock every morning. Do yourself a favor. Get your cell phone, listen to the program. He is from North Carolina. He's got an office in North Carolina. He also works out of the Philippines. He has an office out of the Philippines. They're trading all night long, so they're totally attuned to what's going on across the world. He's on from 8 to 9 in the morning, goes over all the markets. What had happened is that the DAX itself this morning, folks, was down big. And the volatility was vicious inside the DAX this morning. What you had is this, and this was the heads up, because our volatility was not bad prior to the market opening. What the DAX had done, folks, is this. The DAX had already gone from 11,920, and within 30 minutes, it was down at 11,719. So it gave up 200 points in 30 minutes. That's a big number. It did a small counter trend bounce, up to 1184, and then basically just gave it up again. Now, what could you get out of that? Well, what I get out of that, and I was scrambling like wildfire, was that, oh man, there's no way our S&Ps are only going to be down 6.5 points when the DAX tanked that quick. Particularly because when you're looking at the DAX loves to trade like our NASDAQ. These go back and forth, but it does. What we had with the DAX out here today, and this is where I'm coming from the follow through tomorrow. The DAX had an expansion of volume today. If you happen to be watching the Tiger TV, you'll see that expansion. We did 96 million shares, and the DAX, you're coming into a swing point that has 119 million. So what you're going to see out here is that I suspect you're going to go after the swing point. The swing point you're going after is 437. That's another $200 down. Doesn't mean you have to do it in a day, but it's going to go after it. You break that swing point and then get out of the way. Why? Because, folks, the DAX went straight up from 9,400 up to the 12,000 level. And that just didn't stop. when you break down, that is always a problem as to how you went up. What you like to see inside markets, for markets to sustain higher price on a continual basis, is that they build floors versus going up like a little skyrocket 2 or 3 floors without stopping to build a foundation. That's what you have happening inside the DAX. So I suspect what you're going to see out here tomorrow is that overnight, bottom line, we're going to see lower prices even in Asia. And Asia, by the way, let me bring up the Hang Seng for a second. Asia is going to be hard to basically generate lower price. You know, it gave it up, you know, last night. You know, when I say gave it up, well, the Hang Seng was up at 524, and then it ended up still being up 257 points. But the bottom line is what was a lot higher, and the Hang Seng in general did have volume up there. So it looks like the Hang Seng will pull down slightly. That's going to, in turn, pull Europe down. That, in turn, will basically get our markets going also. We'll see. What we do have is that you have a short trading week, meaning the aspect that Tuesday, Wednesday, Thursday, Friday. What we do have already is a very large expansion in volume as this is going into lower numbers. What you also have is that we are in the lower trading range once again. And that trading range by itself, each and every time that you try to break out and you have a failure on the breakout, you come back inside the zone. Bottom line, what does it do? It gives you more momentum to the downside. And each and every time, what we do know is this. Each and every time, the market, no doubt, has saved itself. The evidence, however, is that longer term, and I mean longer term, you know, whether it's this week, next week, we're going down to that October 15th swing point. And that October 15th swing point, folks, is vicious. You know, we're talking the S&P cash right now at 2104. The high of the October 15th swing low is 1912. So that in itself was, what, 200 points, S&P points. The bottom of that is 1820. So that's 300 S&P points. And on a weekly basis thus far, what we have done is this. We broke the trend. Let's see. We broke the trend on the way down the week of May 8th, as well as the week of May 15th. And in both cases, what happened? You got back inside the range to go higher. What we just did today is that we broke down again. Because what happens, of course, with any type of angle line, as you're going up, you don't have to go down as much to break it, because we're at the end of that triangle. Bottom line is that if you stay under the price point, let's see, the top of that trend is 2119.15. You stay under that level, that brings the probability much higher that this leg is going to take you lower by an extraordinary amount. You stay right there, folks. Man, Mr. Andy Heck's going to be coming up next with you, growling and prowling. Dow Industrials finished down $1.90. And always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks. Visualize it, step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great one. Have a safe one.